Hello everybody, this is Joshua Hayes at BigWaveTrading.com coming to you with your weekend quiet market wrap-up. Let's first take a look at the S&P 500, and as you will see, it retook the 50-day moving average 3 days ago actually, and it's done very well holding up above it. Now, the good news is volume's been higher than the volume that was in the base, but volume is still well below the 50-day volume average, which puts this at a distinctly worrisome rally. I will be honest with you. I have gone back to 1880 in the Dow Jones Industrial Average, and I have reviewed low volume rallies. And I can tell you, low volume rallies only work here in 2006, here in 2005, when they are part of an uptrend. When you come from a major downtrend, you can't have low volume rallies and work. You have to have strong volume off the bottom and constant accumulation. And as you see here in early 2003, there was huge accumulation in these few weeks, and then there was more near the end before it went on and rallied. So you need to have a lot of volume whenever you come off the lows to have a real bull market. When you rally on lower volume, like we've had almost every single day since December 8th on the NASDAQ, except for Quadruple Witching Friday on the 19th, we run into a severe problem that the market is being lifted by retail traders and by market makers raising the bid. What likely happens is as this index gets closer and closer to the 50-day moving average, real institutional investors, people that make volume like this, and like this in October, September, and November, and like this in March, or like this, I mean, not that day in March, it's Quadruple Witching. That's whenever you have to really be worried whenever you see the low volume rally, as when they come from long-term downtrends, they usually indicate just a bear market bounce, and they don't last, and you end up failing at the moving average and rolling lower. Now, I believe one guy uses a 13 exponential moving average and a 34-week exponential moving average to find long-term buys and long-term buys and long-term sells. And those two moving average are so far wide apart and are in such a strong downtrend that it's going to be a very long time, it appears, before we're going to have like a super bottom that's going to launch a real bull. Instead, what we have here is we have very nice tails, but we still have big tall red bars sticking out more than the green bars as they decrease whenever they happen. And this week was well under the average. And as you see here in July, August, and September, that rally on extremely low volume, what happened to it? Let's go back and look. Remember the rally in July to August? Volume fell off a cliff, and by the end of August we were rolling over and going back down. So I can see us going to the 200-day moving average, but I cannot see us going over it. Now let's go ahead and move on away from the S&P 500, which was up 3% today. Go to the Dow Jones Industrial Average, which is also 3%. Another very convincingly take of the 50-day moving average. Very bullish for those that use only price, but for those that add volume, that's your telltale sign not to get extremely long this move. Plus, the biggest factor is that there are only two stocks that are setting up in beautiful bases that look like they could be future longs and be big winners. And two is 10 times less than what we had in 2002. That were looking like perfect future big time winners. So it's strange to see only two now, and people calling bottoms everywhere, and seeing 20 to 30 then when nobody was calling a bottom. And one of your biggest clues of how you know that you haven't hit a bottom is everybody says you've hit a bottom. And besides market technicians, I hear a lot of we've hit a bottom. So for now, maybe. And I'm willing to play any rally. That's why we have 10 longs. We've gone from 3 longs to 10 longs in December. We've gone from 38 shorts to 31 shorts from December to January. So we're definitely making a shift back. But the biggest thing is we have 31 shorts remaining. 27 came from March to September, and they are all holding. The only one I covered, ATHR, continues to hold in its downtrend after the one fake out on a huge volume above the 50-day moving average. So, very strange. Let's look at the dollar today. The dollar continues to hold in. And as you can see, once again, with all of these tails, all in this chart, it had another high of day close near 81.86. High of day was 81.92. Another very, very nice tail. And as you can see, you have a mini uptrend. Hopefully it can retake the 50-day moving average. Hopefully the dollar's going to be much stronger than the rest of the world currencies. VIX continues to fall, still at a very high 39. As you can see, 39 is still higher than anything until 2002. So we're coming down a bit, but we'll see how we react right here. The 200-day moving average. NASDAQ 100, also extremely low volume. NASDAQ, extremely low volume. And as you can see in the August rally that failed, extremely low volume. Low volume rallies, I will remind you once again, only work when they come from a previous uptrend. So as we go back and look, see in 2004 we rallied on a strong volume, but in 2005 here at the end, volume was actually lower on most of the days. There were a few big days that kind of skews it. And in 2006 especially, we rallied on low volume, and a ton of people were bearish then, including technicians. But I was not, as I still had beautiful charts like HRZ, RMTR, and many, many others. And I believe, no, that was earlier, but there were others. So we'll go back. The next one is S&P 600. As you can see, not that big of a day today. You would have thought that it would have outperformed the rest of the indexes, but it instead did not. So it was kind of a weak day for the S&P 600, and at the same time was a weak day for the Russell 2000. Let's check on our time. Okay, so now let's look at oil. As you can see, it still to me looks like it put down a bottom whenever it hit 35, and it hit 33 on one contract, I believe, one day. I said it wouldn't go below 40, so I was wrong. I picked a bottom here, believed that this would have been it, back at previous support in early December. Excuse me, folks, I still have a cold, I apologize. But it did break down, but now look at it, it's doing well. So since that day, I now would have had a 16% gain on my futures contract, so not bad. And then, of course, there's gold. And, of course, if I would have taken that gold long here, we would have an 8% move. Gold's still looking very strong, and I have bullish charts out there. Oh, excuse me. There we go. That one. That one. And that one. And now let's look at silver. Nice uptrend. Very nice. Off the lows. And let's look at platinum. Platinum continues to hold its 50-day moving average. If you bought it when it took out the 50-day moving average, you would have around a 10% gain. So not too bad. Anyway, I'm going to go ahead and wrap this up here. It was quiet because there are people sleeping, so I did not want to bother them too much. I hope everyone enjoyed their New Year's. I hope everybody had a very happy and safe New Year's. And I hope that this cold completely goes away this week. And I plan on doing some exercising. Surprise this year, huh? It's been a while. And get back to surfing and or in the gym. And hopefully I can shake this bug and be there early for all you guys in the chat room. Very early, and answer the questions in the forums much earlier than what I can answer them right now while I'm kind of down and out. So anyway, thank you very much. This is Joshua Hayes of BigWaveTrading.com. Aloha.